Are you ready?
Ready.
All right, let's go. Kevin here, top 100 financial advisor and best-selling author. We are here to talk about the stock market. Today, Apple reached a $3 trillion market cap, making it the most valuable company on the face of the earth. And I sold. And I think you want to consider selling as well. So let's go ahead and break it down. Now first, market cap is the value of the company. It is found by taking the current share price times all the shares that are out there. That's it. And at one point today, I was around 1 o'clock or so, it reached a $3 trillion valuation. Again, making the most valuable company on the face of the earth. It was already that way for quite some time. Now, I don't think I need to get into what Apple is, why they're so valuable. You know how popular iPhones are and other things they've been doing on top of their services, including the watch, the streaming service, so on and so forth. But here's the thing. I sold today, and I think you might want to consider. Now, I'm not just telling you to sell Apple. What I am telling you to do is rebalance. You want to rebalance your portfolio at least once per year. I like to do it in June. It is still June, and I like to do it in December. And the reason why you want to consider doing that is to reassess your risk and make sure that you're not overloading in one area of your portfolio, especially in a year where Apple is up, more than 20% so far this year. You want to make sure that you are properly weighted and you're not overweight or over heavy in one particular area or in several industries. So today I'm going to walk you through some of the things that I sold, how much I made in some of these sales, how I decided to reallocate, and what I decided to reallocate into. Now again, it's all about diversification, and it's about taking money off the table and saying, look, I've made my money. I'm going to continue holding. I still have some Apple, but I took a little bit off and put it in other companies to make sure that my portfolio is in the right spaces. Because remember, last year in 2022, tech was not good. Imagine if you had 40 or 50% of your portfolio in tech. You are still down today, even though some tech stocks are up well over 100%. Nvidia is one of those companies. But if you took a 70% loss, right, you're going to need a huge return just to break back even. So having some diversification can help you to prevent some losses, to make some losses feel a lot better. Instead of losing 20%, maybe it's just 2%, right? That can help you, but you have to be in the right areas. And because you don't know, neither do I, what's going to happen in the next 6 months, what's going to happen in 2024, 2025, you want to make sure you diversify and make sure that your portfolio is as even as you can get it. So here are some of the moves that I made, and I'll put some of these things on the screen as well. So I sold about 15% of my Apple shares. I have been holding Apple, at least on public, for 1,107 days. Okay, I talk about long-term investing. I held through the pandemic. I held through 2022 when Apple was down. I'm here, and I still own Apple, okay? But I did sell just a little bit because I was up so much. And in this case, I made 48%. Thanks. I'll take that, and I'll go and enjoy the screenshot that I have and go invest in other places. I sold out of IBM. IBM, it was great in 2022. It was solid, I'll say, in 2022, considering where tech was and where the market was. But it petered out in the last 6 months or so. So I lost 0.87%. Fine. It's fine. I do not care that much. 0.87 is not the worst thing in the world, but we will continue here. I sold Progressive. I made 8% on Progressive. I held Progressive for exactly a year. Now, honestly, for tax purposes, I really should have waited one additional day. Okay, because you get a lower tax rate when you sell a stock when you hold it for more than 1 year, not just 1 year. So again, I really should have held it and sold on, July 3rd, the minute the market opened. I didn't, because I didn't know. I wasn't looking. The market was closing. I just hurry up and hit the sold button and made those moves. But again, it's only 8% gain. It's not the worst thing in the world. And there are other ways to offset my own tax liability. So you consult your tax consultant, your accountant, all that. All right. Next, I saw Danaher. I had Danaher for 1,094 days. At one point, it was amazing, and then it wasn't anymore. Lost 2.6%. Again, that's fine. It's not the worst thing in the world. When you make 48% on Apple, a 2% loss here is fine. A 0.84% loss is fine. Obviously, I would have loved to have made more. I did get some dividends during that time, which is great. Same for IBM. But, it is what it is. So that one's off the table. I had bought it because I wanted some healthcare companies in my portfolio that were doing well at one point. I held this one too long. Again, 1,094 days. That is a long-term investment, or at least it was. Continuing though, I took a little bit off the top from Microsoft. I've had Microsoft for 1,107 days, made 39% there, and then I sold a little bit of O'Reilly's, and I made 68% there. Great for me. Like I said, I told y'all about O'Reilly's. I've definitely told our members only about all of these moves in addition to this, and O'Reilly's was one I picked up, again, was that 1,100 days ago, about 1,000 days ago, 1,032 days, and I'm going to continue holding O'Reilly's, but I did take a little bit off the top because I'm taking that money and investing in different areas. What are those areas that I decided to invest in? One, I added a new company to my portfolio. That is Fair Isaac, FICO. Yeah, the company that creates the whole FICO score. They're doing quite well. I'm going to just quickly give you an overview. I think you know what they do in terms of credit scores. They're up 34% in the last 6 months. It up 101% over the last year. I told you guys that I had a secret company that had done well over 100%. At the time, the numbers are different. This was about a month ago. I told our members only about FICO. You could have been in on that if you was insider members only. So we talked about FICO. Obviously, if I'm investing, I think it's going to continue to do well in the near term future. Next is Chipotle. I decided to invest in Chipotle after selling off IBM and others. Chipotle is a money maker in terms of free cash flow. They are consistent, which is what I like, because I would like my companies that I own to be consistent. They're up 52% in the last 6 months, which is crazy to me, and up 66% over the last year. Chipotle is a company I've always been interested in because it's delicious, but it's one that I've known had done well in the back of my mind, but it was never just in the forefront until now. I live closer to Chipotle. Maybe that's why it's on the front of my mind. But it's one of the few companies where I think it aligns, at least right now, today, where something you enjoy and a place where you spend money is also a place that you might want to consider investing. Our members have known this for more than a week now in terms of what companies I was going to look at. Next here, and this is the last new company that I own and added to the portfolio, and I really switched it out for IBM, and that's Palo Alto Networks. I have talked about this company once or twice on the channel before. Obviously, it's a tech company. Palo Alto is where Stanford is, and a whole bunch of other tech companies rather. They're in the cybersecurity space. I feel like cybersecurity is a space we're always going to need, especially for the foreseeable future, as we move further off into the metaverse or blockchain or whatever the tech people, artificial intelligence, whatever it is they're going to tell us we are supposed to be interested in the tech space over the foreseeable future. They are up 82% in the last 6 months and up 55% over the last year, and I think that is going to continue. They have a strong free cash flow as well. I feel like it's a bit risky to me. So it is probably the riskiest stock that I own, just because it's not the biggest, most established name like a Microsoft. But again, it's only a piece of my portfolio, and that is why you want to own several stocks. It's why you want to own ETFs, because I can afford to be wrong on Palo Alto Networks. Other companies that you may not know that I own that I picked up earlier last year, Merck. So that kind of switches out for Danaher, but I've had it for a bit longer. And I've talked about Ulta. I own that as well. We talked a little bit about this inside members only too. It's supposed to be more of a defensive stock. It is down right now. It took a terrible earnings day dip. Even though the earnings call was positive, they made more money, but the stock fell double digits. Don't know. I saw it as a buying opportunity though, so I continued to buy more. So between now and the end of the year, I'm going to continue investing in all the companies that I listed, as well as index funds and everything else that I normally do already. This is automated on Public. No, on Fridays, I used to say, hey, I'm dollar cost averaging, adding more, but it's automated now, so I just sit back and don't really talk about it, but it does continue to happen for those who may be wondering what happened to dollar cost averaging Friday. That still happens, okay? But I'm going to continue investing. I'm not going to do anything else until December of 2023. I'll sit down and say, hey, look, Palo Alto Networks, you pass on to 2024 and the things went the way that I expected them to. Obviously, I would not invest in things that I don't think will do well. I'm not perfect. Okay, nobody is. So we'll see how well these companies do. And I'll sit back and assess not only how well these stocks did, but also where the economy is going and where I think the economy is going to go in 2024. I don't know what consumer spending is going to be like in December. I don't know what's going to happen between now and December, right? There are a lot of things, hopefully they're positive, but there are a lot of things that can happen that can change my outlook on how I want to adjust my portfolio. What if this whole AI thing is a bubble, right? I think it is, and I think things are a little too hot in the AI space. Maybe I'm right, maybe I'm wrong, right? And what happens in December, perhaps things will change my view and perhaps there will be some reflections in my portfolio. We will see. All right, that is it for me today. I would love to hear what your thoughts are, not just on the moves that I made, but what are some of the moves that you are making? I've talked to several people, both in the comments here, on Twitter, Instagram, and other places, people making some tweaks to your portfolio, which is a good thing to do, okay? You want to make sure your portfolio is up to date 1 to 4 times a year, okay? I'd pick right in the middle and do 2, either quarterly, 1, 2, 3, 4, or halfway, which is right now, or just at one point in the year. You want to make those adjustments, all right? That is it for me today. I will talk to y'all next week. Bye.